The most anticipated earnings releases for the week of February 12, 2024. Presented by Earnings Quispers. The number of companies reporting earnings this week ticks lower somewhat, but you won't be able to tell a difference, most likely, because there are still nearly 450 companies with analyst coverage scheduled to report. We start things off Monday morning, appropriately, with Monday.com. Expectations are high going into the earnings release, and the stock is reaching its highest levels since 2021. Among the highest expectations for the week is Arista Networks, which reports after the close on Monday. The company is in the early stages of a secular growth story, which puts the longer-term bias to the upside, but it is also among the most crowded trades of the week, making it vulnerable in the near term. The conventional wisdom at the moment is the consumer is getting pressured and retail sales are softening, and that has sentiment remaining rather bearish in Shopify going into the company's earnings release. However, the data shows the consumer holding up and retail spending continues to shift online. That favors the stock going into earnings. Sentiment has turned bullish for Datadog going into earnings, but just modestly so, which still favors the stock ahead of an expected beat and raise. Twilio already told us they are going to exceed 57 cents per share for the quarter, so of course the analysts have raised their estimate to 58 cents. 58 cents, however, would be rather disappointing though because expectations are for something a little more substantial. But since we already know that, the focus will be on the company's guidance. Analyst checks support the company's guidance and suggest favorable trends to start 2024. There is a modest expectation of an earnings beat by Albemarle, but only because the analysts covering the company tend to be conservative and they've taken numbers down heading into the earnings release. Expectations are for numbers to continue lower after the company reports, and that implies overall downside risks. It is, however, worth noting that short interest has been climbing to its highest level since the middle of the pandemic. So once the fundamentals turn, there appear to be plenty of people on the other side that will need to get out. There is a clear secular trend behind DraftKings, which reports after the close on Thursday, and data checks show this has continued during the quarter. Those trends are expected to continue going forward too. Ultimately, that implies owning the stock. This is long from a sure thing though, because there are some data checks suggesting the house didn't always win during the quarter and didn't even win as much as usual, and sentiment has reached a point that has resulted in a near-term top in the stock's young history. Analysts get paid to put numbers out there even when they really have no clue what the company will report. Sometimes, that gives us an edge. For Coinbase, they really don't know what the company will report, and we don't either. In fact, analysts have yet to be remotely close to the company's reported results. But what we know is that the stock spent 18 months building a base below $100 and has recently broken out to the upside, and after pulling back, it has held above this base. We also know that there is a correlation between the stock and the price of Bitcoin, which has been trading at its highest level in nearly 2 years. Therefore, any weakness following earnings should likely be bought. Fridays are typically light, and while this Friday has a number of names that often get investors' and traders' interest, the attention is unusually focused on Arbor Realty Trust. The REITs, as a whole, reported strong results last quarter and that helped the market rally into the year-end, but short sellers have only been adding to their positions in Arbor Realty, and is now up 650% compared to the same time last year. This is the week that we move our focus more away from the large cap names and more to the small caps, and that means more volatility. Byrna Technologies is one standout, which has averaged a 9% move in recent quarters, even as it sold off to lows as Facebook and Google banned the company's advertising efforts. Last quarter, the company said it was encouraged by its efforts to overcome the bans, and more recently, it said its new strategy is paying off. The stock has returned to the $10 level ahead of earnings, which is where it stalled most of 2022 and around this time last year, and one way or another, traders suspect this means something big. As we shift the monthly calendar out another week, we see Adobe and Ulta Beauty scheduled to report in mid-March. Oracle is also expected to report that week, but they haven't given us the official nod yet. Therefore, they aren't on this calendar. They probably won't tell us for sure until the beginning of March.
Shh.